Stephanie, we give a Nobel Prize we give like 3 of them out to 3 different economists every year, and yet the debate still rages about whether money is treated better in the public sector or the private sector, and nobody's getting closer to the other's viewpoint on this. And I would just say, if just endless stimulus, more and more spending, always would result in higher GDP and better growth and higher stock prices, it just seems like this is an absurdist argument, but why not just spend as much as why not give everyone 50 grand instead of 2 grand and just spend all of that, and everything's going to be fine and the economy just will rocket and the stock market will be at 100,000. But we know that the growth and wealth is generated by the private sector, and it's just spent by the public sector.
Okay, well, look, let's talk about what causes the economy to grow, right? It's spending. So we can't make spending the enemy of, prosperity, because GDP is nothing more than a measure of total spending in the economy. And, quite frankly, cash registers don't discriminate. They don't discriminate a public spent dollar from a privately spent dollar. The point is capitalism runs on sales, right? So whether it's the private sector or the public sector generating the spending that leads to someone else having income, that then you get a multiplier effect and more robust economic recovery. The reality is that right now, the private sector is spending less. Why? Because of the pandemic. Because consumers are cutting back, and when consumers cut back, businesses lose out on customers, so their revenue goes down, so their profit goes down, so government can come in and backfill some of that lost spending and help to support the economy. At some point, the recovery will take hold, and it will be appropriate to withdraw the fiscal support. So it isn't a permanent increase in large deficits. It's temporary, and it's there to help lay a foundation for a sustainable recovery.
Grover, the argument that the other side would make is that sooner or later interest rates rise based on the amount of money that we've borrowed, and that becomes a permanent sort of governor on any decent growth, and is what holds things down because you've spent too much. Is that what? But rates are so low that doesn't seem to be that. That doesn't seem to be the issue right now.
That debt is out there, and it continues, and that those rates will go back up again, and inflation will come back if this continues. Again, we've lived through this with Carter. We've tried these policies before. They didn't work. I would suggest that the arguer that that spending money creates wealth. Greece, Italy, Argentina. These are all should be wealthy countries if that economic theory made any sense at all. I don't mean off by a little. I mean if it made any sense at all. It doesn't.
Shepard Smith here. Thanks for watching CNBC on YouTube.